Check out this clip from the Monday Money Tip Podcast.
Super excited about that. Now, today, I'm going to talk about current stuff. I like to update this about quarterly in the podcast, and that is different rates that are happening.
Yep.
And so we always like to update on 3 different types of rates, and that's mortgage rates, savings rates, and CD rates. And so in the interest of keeping everybody up to speed on that, I want to give you the update. Now, the last time we updated was November 12th of 2018. And so let me give you the update on mortgage rates. If you're looking to buy a home or if you're looking to refinance, it's important to be aware of what's happening with rates. And the 30-year rate has actually went down slightly from last November. And it's went down from an average of about 4.70% down to a range of 4.50 to 4.625. And so generally mortgage rates for some reason run on the eighths, the 0.125s. So it's from 4 4/8 or 4.5 to 4 5/8. And 15-year rates, because there's a little bit less risk, right? You're promising to repay 15 years sooner. You get a credit for that, and they charge lower interest. Those rates are also slightly down from 4.04% average in November down to an average of 3 7/8 to 4%. So 3.875 to 4.00%. So that's actually a positive thing. That's going to allow the economy to continue to roll. Housing starts will continue to go very well. And the Federal Reserve, these rates are directly related to what the Federal Reserve sets rates at. And the Federal Reserve has kind of paused increasing rates. They're indicating they may increase them 1 or 2 times max in 2019. It can be very helpful for mortgage rates. They may not raise them at all. And so that has allowed these rates to remain in very favorable rate areas. Now, basic saving rates have changed. Megan, why don't you update everybody on what's happened with Marcus savings rates?
Yeah, so Marcus is up. So it was, last time we did this, it was 2.05, and now we are at 2.25.
Yes.
So that's awesome. And then we have Ally Bank, which is my personal favorite. And it is up from 1.9%, and it is currently at 2.20%.
It's a huge increase.
Yeah. And then last one is American Express, and it is up from 1.9% to 2.1%.
That's right. And so if you have your money stranded, and that's the right word, stranded, in a big bank savings account, paying you 0.04% interest, or you don't know what interest your savings account is making for you, man, you got to wake up and get your money to work for you. You work too hard for your money. It's time to make your money work for you. And your savings rates needs to at least keep pace with inflation. And a great place to do that is those 3 accounts, Marcus, Ally, and American Express Bank. Discover Bank's another favorite. You can find all those under the Next Steps area under banking. So the other one is CD rates. And CDs are certificates of deposit. And that's where they kind of lock up your money for a period of time. You can't really access it without a penalty, but you get better interest for it. And so right now, a 1-year CD rate is up from 2.58% in November to an average of 2.75%. And the 3-year, now this is all assuming you have a minimum of $5,000 in a CD, okay? That 3-year is the 2.85%, up from 2.77%. And the 5-year is 3.10%. It's up from 2.95%. So here's what I hear when I'm sharing all these numbers is you're getting more money for your money when you have money, and you're charging less money. You're being charged less money when you're borrowing for your house. This means very good things for cash flow at your household. You're making more money on your savings and paying less on your home mortgage. These are both very good things. So pay attention to that. We'll keep you abreast of this about once every quarter. And so that's it for current money events, the current money events section of the podcast.
We almost made it an episode without you singing.
For full episodes, subscribe to the I Was Broke, Now I'm Not YouTube channel.